Hello friends, welcome to our new blog. Let us meet Alex. Alex is a famous heart surgeon in City Hospital. As part of his day-to-day service, he treats a lot of patients in the City Hospital. He also presides on few of the heart surgeries. In return to his service, Alex receives a compensation from the hospital in the form of salary. Alex in turn deposits his salary as well as he invests his salary into some good securities which gives him a good amount of returns. Here, my friends, Alex has helped us understand the first player of the financial world, that is the depositor or the investor. Just as a quick recap, this is our vlog 3 on players in financial market. Our first block was on time value of money, second block was on the interest rate calculations, and this is our third block on the players in financial market. Just as a quick request, please do like, share, subscribe and press that bell icon to be notified whenever we have our new blogs. Coming back to Alex, so we have just seen Alex, the depositor or the investor. This is what the Alex is today, but this was not really the story 10 years ago. 10 years ago, when Alex was doing his medical examinations and studies, he had brought a student loan. At this time, Alex was a borrower. You must all be wondering, Alex is a busy man. He treats his patients, he presides over heart surgery. How exactly Alex gets to know about the good interest paying securities? Here, my friends, we come to our third player of the financial world, which are financial intermediaries. Financial intermediaries are those middlemen who help people like Alex, you and me to understand good securities that are there in the market. Some examples of financial intermediary are financial advisor. They can be your portfolio managers, your CFAs, etc. Banks can also be financial intermediary, where it takes the deposits from the depositors and it gives the deposits or the loans to borrowers. Collective investment scheme are like mutual funds which collect the money from a lot of people or common people, and they have a portfolio manager who decides the investments for the scheme. Stock exchange can also be one of the financial intermediary, where it provides a platform, a common platform where people can come together, buy, share, sell securities or equities. Now, financial intermediary are not someone who issues a security. They are someone who helps bridge the gap between depositors, investors and issuers of the financial security. So our fourth player in the financial market is the issuer. Issuers are someone who needs money, and in return to the cash they issue a security, a contract which they will abide somewhere in future, sometime in future. These issuers can be governments, corporates, banks, credit societies. Between government and corporate, always remember, my friends, government will have the highest ratings. Government will have the highest ratings in terms because government will never go bankrupt because they have the power to print money. If they do not have money, they can print money and they can give, but normally government doesn't goes bankrupt, and that is a reason why governments normally have higher ratings than corporate. Now you all must be wondering that Alex receives a good salary. He has found a financial intermediary which has helped him find the issuer. His money is placed with the issuer and he is going to get a good return. So Alex must be a happy man. This is what a general idea that comes to our mind. Let us see how Alex feels now. In fact, Alex is a bit worried man now. Why exactly he is worried? He is worried because he has given cash to the issuers. He has given this cash to the issuers, and in return he has got only contract, a paper which tells that he has given so much of cash and the issuer will return him some money after 10 years, 15 years or 20 years. He is worried that after 10 years, if some issuer decides not to abide to the contract or some issuers default, what exactly will happen to his money? So Alex is a worried man now. Here we introduce to our next player of the financial market, which is the most critical player to boost investors' confidence. This player is, my friends, the regulators. Regulators like the central bank, SEC, Securities and Exchange Commission, SEBI, Securities and Exchange Board of India, central bank, we will just see them in details, what are the roles that they play. Securities and Exchange Commission, this is mainly for US, this is for, as stated, for India. They are mainly related with equities. Now moving to the central bank. What are the roles of central bank? What are the roles that central bank plays? Central bank, every country has one central bank which is a supervised bank. Now if you divide the word, it is supervised. So it is the super bank to all the banks that are available, all the retail banks that are available. So the first important role of a central bank is it supervises other bank. It lays the guidelines on which the other bank should operate. It issues the licenses. If some of the bank doesn't follows the guidelines of the central bank, it has power to revoke the license. The second important role is to decide the monetary policy. Monetary policy is mainly associated with control of money, control of money supply. One of the main reasons of monetary policy, or one of the main objective of monetary policy, is to keep inflation rates in check. The third important role of a central bank is it is banker for the government. Now you and me and Alex has XYZ Retail Bank as his famous bank, which we have already seen in our first two blogs. But government doesn't has their favorite bank, and that is the reason why government will always rely on with the central bank. They have their accounts in the central bank. Government does all the transactions via central bank. Fourth important point of a role of a central bank is to maintain or to ensure the financial stability. Central bank will conduct regular audits of the retail banks or the banks operating under its permit. It will try to find the loopholes in the system, cover those loopholes. So to ensure financial stability and integrity is one of the key role of the central bank. Fifth role of the central bank is it is lender to the bank. Now banks often need money. They might be out of their CRR ratio, or they need money for to address their immediate liquidity requirement. There are various options that central bank provides. Some of the options like the repos, repurchase agreements. One famous example from 2008 lemon crisis is in India. There was a rumor that ICICI Bank, one of the important private player bank, had a big exposures to Lehman Brothers, and since Lehman Brothers had just collapsed, there was a fear among the investors that ICICI Bank may go to may attend the same fate that Lehman Brothers had, and so many of the small depositors, high net worth individuals queued up to Axis Bank to get their money back or to get their money in the form of cash. That means ICICI Bank had an immediate requirement of a immediate high liquidity requirement. To ensure integrity and confidence of investors, RBI, which is Reserve Bank of India, stepped in. It took a lot of measures. One of the measures was to open line of credit for ICICI Bank, because of which ICICI was able to honor all the requests that came through, all the cash requests that came through. So this is one example where it acted as a lender to the bank to ensure investors' confidence is boosted, is kept. Sixth important role, foreign exchange reserves. Foreign exchange reserves are mainly decided by demand and supply. Central bank maintains exchange reserves to control sharp movements of the exchange rates. Seventh, financial literacy. You must all have come across advertisements like never share your OTP. In case of any fraudulent transaction, do not panic, report it to your bank, do not share your password. So these all advertisement falls under the permit of financial literacy role that central bank plays. The last mentioned here is the issue money. RBI on directions of government prints money. This is to maintain the adequate supply of money. Normally there is a minimum reserve, it follows the minimum reserve system. Under minimum reserve system, RBI has to keep minimum reserves of some primarily decided cash amount, for example 200 crores, in a form of bullion or foreign currencies or gold coins. So based upon this, it issues money. So these were the players in financial market. Just as a quick recap, first we saw Alex as a depositor or the investor, person who receives money. He goes to and deposits his money into bank, or he invests the money. Second, we saw the borrower who is in the immediate need of money, can approach a bank, take the loans. Financial intermediaries are those middlemen who connect between depositors, investors and the issuers. Issuers are someone who need money but have capabilities of introducing financial securities which can be traded for cash with the investors. And regulators are those watchdogs who creates the guidelines so that the financial integrity is maintained and people are less worried. With this, we come to our end of this blog. The next blog will be on how money is created. Please do leave us a comment on how did you like this blog. Many thanks.